Good morning, traders. Before we begin, stay until the end because there will be a multiple choice quiz based on today's analysis to help you sharpen your understanding of liquidity and imbalances. And I will also walk you through the indicator that we have developed to auto plot your PDH and PDL and all the inefficiencies, the FVGs found on 1 hour and 4 hour. If you find value in these daily breakdowns, consider subscribing for consistent XAUUSD analysis focused on structure, liquidity, and execution clarity. Now let's get into the market context. Yesterday, gold saw a sharp sell-off of nearly 4%, pushing price down aggressively to around 4,500 to 4,502 level, which I had predicted in yesterday's analysis. This kind of move represents strong bearish displacement, meaning the market moved with momentum and left behind several inefficiencies. However, what's very interesting is the price has reacted precisely from a much older 4-hour sell-side imbalance sitting at around 4,500, which is a major psychological level. So right now we're at a critical point where the market has delivered strong downside movement, reached a high probability reaction zone, started showing signs of response. The key question is this the beginning of a reversal or a temporary reaction before continuing lower? So let's break down step by step. Step 1, as usual, is to mark the PDH and PDL. You can see that the indicator that we've developed auto plots your previous day high and previous day low, right? So you can see that the previous day's high is at 4,867.225. Yesterday's range is extremely important because it was driven by very strong bearish momentum, and you can see the PDL has been marked at 4,502.3, right? So if price continues below that low, it signals continuation, but if the price starts moving back into yesterday's range, which it has, that means that could be this move down could have been a retracement or a rebalance phase. So you can see the PDH and PDL being auto plotted here. Now we move on to the daily time frame. On the daily time frame, the sharp sell-off has created this SiBi, which was made day before yesterday. That being said, this has not closed, so we will have to see how it works. Whenever price moves aggressively like this, it leaves areas where the market has not traded efficiently. You can see this here. This zone often acts as a future target because the market tends to revisit them over time. However, after such strong moves, the market doesn't always immediately retrace, so we need to stay flexible between continuation lower or retracement into these inefficiencies. We now move on to our 4-hour, right? I understand this could seem a bit overwhelming, all of the auto plot, but it is important for us to know where there are BCs and SiBis. But I will tune into our previous day's range so as to not overwhelm you. So you can see the PDH and PDL. So there was one SiBi that was made here, 4-hour SiBi, and another one here. This has currently been filled or invalidated, so let's see if this will replot. That being said, this is a 4-hour bearish FVG that the market could react from. And you can also see there was an older 4-hour SiBi in this area. There were multiple, all the red ones are 4-hour SiBis. You can see that the indicator also says if it's a 4-hour bearish or a bullish FVG. And you can see there was one FVG, this red one, which was a very old FVG. You can see here, this is from the 11th of January. So there was a 1 hour bull, 4 hour bull, 4 hour bull, and a 1 hour bull, right? So it came and retraced into all of this and then reacted, as you can see. So older imbalances often act as strong reaction zones, especially when they align with psychological levels. This 4 hour, 1 hour, right, overlapped almost with 4,500, which is where the market actually reacted from. That being said, the reaction from this level suggests buyers are stepping in, or at least sellers are taking profit. So if price starts retracing, the new 4-hour SiBi above becomes a key resistance zone, which it has tapped right now, right? We now move on to the 1 hour. We maintaining the range, right? So we can see that there was a 1 hour. Now let's start from the PDH. We can see that a 1 hour bearish was here. There was one here. There were FVGs here, but those have been invalidated, and it has created two new 1 hour bullish FVGs, right? So the three imbalances, which were SiBis, that's these zones which represent areas where selling pressure dominated. If price retraces upward, these become stacked resistance zones. So what that means is the market may slow down, reject, or continue lower, right? If it just moves through all of this, it could continue higher. You can see that it already easily moved through a sell-side imbalance which was formed yesterday, and it's also made two bullish FVGs today, right? And as you can see, this was auto-plotted by our indicator. So today, if we see upward movement, the key is to watch how price reacts at these 1 hour inefficiencies, right? We now move on to our volume profile. As you know, the previous days, so we go on Thursday, right? Yesterday was Thursday, so we start on Wednesday at 1800 hours, right? Wednesday 1800 hours until Thursday at 1600 hours, right? This is your previous day's value area high. This is your previous day's point of control. This is your previous day's value area low. Ensure these levels are marked accurately, right? So let us analyze the volume profile. After such a strong sell-off, price is likely trading. Currently, it is trading above the value area high, previous day's value area high, right? So the value area high could act as resistance, but you can see it's moved through. So let's see what the market does. The value area low might act as support, right? If it comes down, this level 550 could act as support. The POC becomes a magnet for price. That being said, the market has closed above the POC. Value area high is a target if retracement continues, and it has already hit that target, right? But if price fails to reclaim value, it suggests continued weakness. So now it's closed above. That being said, let us watch if it will continue up or if it rejects further down, right? So let's focus now on psychological levels. The 4,500 level is extremely important. It's a round number. It aligns with an older 4-hour SiBi, BC, buy side FVG, and 1-hour BC, right? You can see where it reacted from at the 500 level, right? So this confluence makes it a high probability zone. So if price holds above this 4,500 level, it increases the chance of a retracement, and you can see that the market is actually retracing. But if the price breaks below this, it signals a continuation lower. So the market framework for today is putting everything together, which reflects the strong 4-hour bearish move, multiple imbalances being created, price reaction from a major 1-hour, 4-hour SiBi at around 4,500, and the key psychological level is at play. So the market is currently at a reaction zone after displacement. So if price holds above 4,500 and builds structure, we could see bullish retracement. Then we may see moves into the 1-hour SiBis, possible rotation around the POC. And the bearish continuation scenario, if price fails to hold above the 4,500 level and breaks below with momentum, then we see a continuation lower, right? So in closing, gold experienced a sharp 4% sell-off but has now reached a major confluence zone around 4,500, where an older 4-hour, 1-hour SiBi and psychological levels align. This reaction is important, but it does not confirm reversal yet. Today is about watching whether the market holds and retraces or breaks and continues lower. Stay patient, avoid chasing, and let price confirm direction around these key levels.